Listen, I need to tell you about something absolutely insane that just happened in the financial markets. And honestly, I'm still trying to wrap my head around it because for decades, people told us this moment would never come. Silver just crossed $100 per ounce. And I'm not talking about some temporary spike or a fake out. I'm talking about a complete demolition of every barrier that's been holding this metal down for half a century. So right now, before you click away, I want you to understand that what happened on Friday, January 23rd, 2026 wasn't just another trading day. It was the moment when math and reality finally collided with the paper games that Wall Street has been playing since your grandparents were young. The spot price is bouncing between $103 and $103.90. And if you're wondering why this matters to you, even if you don't own a single ounce of silver, stick with me because this is affecting everything from your smartphone to the solar panels on roofs to the electric cars rolling off assembly lines right now. But here's where it gets wild. Gold is sitting near $5,000, which is massive, right? But silver just moved over 7% in a single day. And when a market this huge moves that fast, we're not watching normal trading anymore. We're watching what finance nerds call a repricing event, which is just a fancy way of saying the old price was a lie and the market is figuring out the real value in real time. Now, I've been following precious metals for years, and I'll be honest with you, I always believed silver was undervalued. But even I didn't expect the move to be this violent, this fast. And that's what makes this so fascinating, because it's not just one thing driving this rocket ship, it's multiple forces colliding at exactly the same moment. Let me break down the single most important number you need to understand right now. It's called the gold to silver ratio. And historically, this sits around 60 to 1 or 80 to 1, meaning gold costs 60 to 80 times more than silver per ounce. Today, that ratio crashed to 48 to 1. And what that's screaming at us is that silver isn't just following gold's safe haven rally, it's actually leading the charge. And that tells me something fundamental has shifted in the supply and demand equation. For the first time in modern history, the physical metal is dictating the price instead of the paper contracts. And this is huge because for decades, the price of silver was controlled by futures contracts on exchanges like COMEX, which are basically just promises to deliver metal at some future date. But here's the dirty secret. A lot of that metal didn't actually exist in vaults. It was just paper shuffling back and forth between traders. What we're seeing now is something called backwardation, which sounds complicated, but it's actually simple. It means people are paying more to get the metal in their hands today than they're willing to pay for a promise to get it next month. And that's the market's way of panicking and saying, I don't trust your paper anymore. I need the real thing right now. So why is this happening in January 2026 specifically? Well, let me paint you a picture of what's been building over the last 5 years. Humanity has been going all in on 3 major technology shifts: artificial intelligence, green energy, and electrification of transportation. And guess what every single one of those technologies absolutely requires to function? Silver, and not just a little bit of it, massive amounts of it. Silver is the most electrically conductive element on the periodic table. You literally cannot replace it with anything else if you want maximum efficiency. And here's where the math gets scary. The new generation of solar panels that became industry standard last year use 50% more silver than the old ones because they're more efficient. Every AI data center being built right now to power ChatGPT and all these other systems needs high-performance connectors that won't overheat, and those connectors are made with silver. Plus, every electric vehicle rolling off the line has about 2 ounces of silver in its circuitry and wiring. Now here's the kicker. Mining supply has been basically flat since 2016. We haven't discovered any new mega mines, and the deficit between what we're mining and what industry needs has been getting filled by above-ground stockpiles that various governments and institutions have been sitting on for decades. Friday's price explosion is the market's way of confirming that those stockpiles are gone. They've been drained. And now the tech giants like Samsung and Tesla and the massive solar manufacturers realize they're dangerously close to having to shut down production lines because they can't get enough raw material. These companies stopped trying to negotiate on price. They just started hitting the buy button at whatever the market was asking. And when you have trillion-dollar corporations panic buying a commodity all at the same time, the price doesn't gradually increase. It teleports to a new level overnight. But wait, there's a second engine driving this price explosion, and it's even more dramatic than the industrial demand story. We're watching what might be the mother of all short squeezes happening in real time. For years, big financial institutions have been selling silver they didn't actually own, betting that the price would stay low forever. They were shorting the metal and collecting profits as long as the price stayed flat or went down. At $100 per ounce, that bet just exploded in their faces. These institutions are getting margin calls right now, which means they have to either deposit billions of dollars to cover their losing positions, or they have to go into the market and buy the actual silver to close out their shorts. Here's the trap they're in. To close a short position, you have to buy. So you've got short sellers forced to buy at any price to survive, competing with industrial giants who are forced to buy at any price to keep their factories running. And it creates this feedback loop where buying triggers more buying, which triggers higher prices, which triggers more margin calls, which triggers more buying. It's a classic short squeeze, but unlike GameStop or some meme stock, this is happening to a global strategic commodity that the entire modern economy depends on. And the speed of this move to $103 suggests that some major Wall Street players are getting absolutely destroyed right now. Now, let me show you what's happening on the ground level, because this is where it gets really interesting for regular people. I checked the major bullion dealer websites this morning just to see what's available. And if you want a 1-ounce Silver Eagle or Canadian Maple Leaf right now, good luck finding one. The spot price is $103, but the actual street price, where you can buy physical coins, is completely disconnected from that. We're seeing premiums of $20, $30, sometimes $40 over spot, which means if you want a single ounce of silver in your hand, you might be paying $130 or $140. Why such a huge premium? Well, because the people who actually hold physical metal, the coin shops, the wholesalers, the longtime collectors who've been stacking for years, they're not selling. Think about it logically. If you held silver for 10 years waiting for this exact moment, are you going to sell the second it crosses $100? Probably not. You're going to hold because you see the momentum building and you think it's going higher. We're facing what I'd call a liquidity crisis in the physical market. The government mints are backlogged with orders. The refiners can't melt down bars and produce coins fast enough to meet demand. And we're entering this weird period where silver is becoming almost unobtainable. Having cash won't matter if there's simply no metal available to purchase. So, what's my take on all this? Honestly, I think we've entered a completely new paradigm where the era of cheap silver is permanently over. The days of walking into a shop and buying a tube of coins for $500 are a memory now, and what we're seeing is the price finally reflecting the actual utility and scarcity of this metal instead of being suppressed by paper derivatives. Some analysts are already calling for a pullback, saying $100 is overbought, and maybe there'll be some short-term volatility. But when I look at the fundamentals, the mines aren't suddenly producing more, the solar panels aren't using less, the AI revolution isn't slowing down, and the short sellers haven't finished covering their positions yet. Technically, we're in what traders call price discovery mode, which means nobody really knows where the ceiling is because we've never been here before. Is the next stop 120, 150, even higher? I genuinely don't know, and anyone who tells you they know for certain is lying to you. What I do know is that the fundamentals have changed forever. The $100 mark is broken, and whether you're someone who's been holding silver for years or someone who's just learning about this now, we're watching financial history being written in real time. If you're holding, congratulations, you earned this moment. And if you're looking to get in, just be careful, be patient, and understand that the game has completely changed. I want to know what you think your strategy is. Are you selling into this strength and taking profits, or are you holding for $200 and beyond? Drop a comment below and let me know, because I'm genuinely curious what people are thinking right now. This is the kind of moment that comes along maybe once in a generation, and we get to watch it unfold live. So, thanks for watching, and I'll see you in the next update when we find out just how high this thing can go.